Wall Street's highest ranking Tesla stock bull just went on TV and reacted to Tesla stock earnings. And no, I'm not talking about Colin because he now has a neutral rating on Tesla stock, so he's no longer a Tesla stock bull for now. I'm talking about Felipe, who has a buy rating on Tesla stock, and he's number 84 out of all of Wall Street analysts. His price target currently is $180. He has been bullish on Tesla stock for quite a while. Average return 66.14% per rating. There are other analysts that are ranked quite high as well, but not as high as Felipe.
Let's bring in Jefferies Global Autos analyst Felipe Ushuaia, who is joining us this morning. Longtime bull on Tesla, just recently slashed a price target on the stock by 50%. Why?
Yeah. Well, if you look at what happened in the past few months, combination of the market rates going up, the absolute growth story around Tesla being questioned, and also what happens to the inflation or gross margin. So I think we've put that into context of lesser growth, uncertainty about the margin progression, much more volatility, and a different environment that led us to revise the upside on that stock.
So you still, though, again, are a buy on the stock. Would you be a buy, particularly in the wake of this report?
Mm-hmm. Well, what was interesting is it was a miss, definitely.
I personally don't think it was a miss at all. Some parts were a little bit surprising. What was quite surprising is that nothing actually good really came out of earnings, and also nothing bad at all. And yet the stock is up. Well, the market has not closed yet when I'm recording this, but wow. Today, I'm sad. The buying opportunity is ending. But what he is talking about, it seems, is the automotive gross margin. The consensus was at 26.4%, and the actual was only 24.3%, although EPS came in at 119, while the consensus was at 110. However, if you exclude the one-time deferred full self-driving revenue recognition, because Tesla released full self-driving beta to basically everyone who actually has full self-driving in North America. Therefore, Tesla was able to recognize that profit before it did not. If we exclude that profit, then earnings came in right at expectations. However, analysts are sort of supposed to consider that as well. So I wouldn't really give the analysts a pat on the back saying, oh, you guessed it perfectly, because part of your job is to also guess these one-time things as well. But of course, they do have a very good point that going forward, that is not really going to happen again, although Tesla did not recognize everything, so we do expect that to happen again. But it will not just keep continuing indefinitely, although no company ever lasts indefinitely either. Once the company becomes one of the top 500 largest companies in USA, it only stays in that top 500 for 21.4 years as of 2020, and that number used to be 32 years in 1965. Although it does fluctuate quite a bit, and it was as low as 18-ish years around here. So yeah, and then around the dot-com bubble, 13.8 years.
But I think the consensus right now is a big, fast-moving target. So it's hard to I think it was within the margin of error. I think there was, as you discussed, I think earlier, there was a number of indicators about, as they ramp up other plans, battery cost improvement, that can, and the IRA impact as well, could easily reverse maybe 5 percentage points of margin.
He's talking about Tesla losing the $7,500 credit for the Tesla Model Y, which was considered not an SUV by the IRS. Although I asked ChatGPT, even ChatGPT knows that the Model Y is an SUV. It says that an SUV is typically larger and taller than a sedan or a hatchback. They are designed to offer more interior space, which Model Y does, and cargo capacity, which a Model Y does, than a traditional car, and they often have higher ground clearance. The Tesla Model Y fits this description and is larger and taller than the Model 3. Furthermore, the Tesla Model Y has all-wheel drive, which is a common feature in SUVs. It can tow up to 3,500 pounds, which is also a common feature for some SUVs, and it has off-road capabilities, which is also a common feature in SUVs. As a result, it is widely considered as an SUV by experts and in the automotive industry, but not by the IRS. That's not corruption, right?
So I think this is not going to happen immediately over the next 4 to 6 quarters. I think that's to claw back in margin, and that was quite interesting. I think what's important to us in Tesla for us is two things. The issue entering 23 in autos was affordability everywhere. And Tesla is a brand that the mission is to make that transition possible, and therefore affordability is a core value. They've addressed that.
It is so surprising to hear someone from Wall Street actually understand Tesla.
For a while, they enjoyed, like everybody else, excess earnings in COVID, and they decided to take a look at a cost curve and then decide to go for affordability. That's a very important event for us in the industry. And then, of course, Tesla continues to challenge just about everything the industry does. And we think that if they execute and what they intend to do and they deliver it and are able to put in place what they want to do, I think the outcome is a much more efficient auto industry. But that's going to take some time to validate that. But those are for us the key beliefs that we have around Tesla.
Felipe, how concerned are you that Elon Musk is just doing too much? Now, we were on the earnings call last night. He sounded a little sleepy. All right, he's testifying in court. He said he spent Tuesday late night talking to the Tesla AI team. And then on Twitter a couple hours ago, he said after he did all that, he spent more time at Twitter's headquarters. I mean, Elon Musk is Tesla. How concerned are you that he's being stretched thin and Tesla's going to be impacted?
Yeah, no, it is a concern. It has been for a long time. And I think we've published research many times in the past where we say the thing is, one, the enemy is inside of Tesla. Musk is an incredible driving force, but he's also the one that brings unnecessary risk in a way to the situation.
In the ideal world, I would only have the good parts of Elon Musk, and there has been a lot of noise about Twitter and all of the shenanigans. Probably not good for Tesla stock. Largely overall, I support Elon Musk. Now, as a Tesla stock investor, I would prefer Elon to just focus on Tesla. That's not going to happen. Forget about it. Don't even expect that. If he does that, that is such a bonus. I mean, that would almost be as unexpected as Gordon Johnson becoming a Tesla stock bull. Possible, not likely. And if Elon Musk was not like that, he would not have even started an electric vehicle company. I mean, he was in a meeting with Charlie Munger, Warren Buffett's partner, and he said to Elon, here are all the ways you are going to fail. This is not going to work. You almost have no chance of making this work. And Elon did it anyway. He said, screw all of you. I'm going to make this work. So you need the bad to make this work. And the bad is really in quotes because that was an asset to Tesla for the longest time. And some are saying that this is starting to change because Tesla is now a gigantic company. But I would say, if you believe in full self-driving, I don't think so. Full self-driving, many analysts still think it's a pipe dream. It's not happening. It will never happen. Lower your expectations. This has been all a lie. I strongly disagree. And for innovations like that, where you are pushing against everybody, you need someone as strong as Elon Musk to push back and to not cave in and to not give in. So Elon is a huge asset to Tesla. Let's not kick Elon Musk out. As long as Tesla has a lot of innovations coming up, we need Elon still.
At the same time, what we have to keep in mind is what we say as well is Tesla is bigger than Musk. So he has been the impetus. The question with Elon Musk as an individual is he does a lot of things, maybe too many things. But it's not like he's going to listen to, if you tell him what to do, he's not going to do it. He has to self-correct.
Again, so refreshing to hear someone that actually understands Tesla and Elon Musk to a high degree. Elon self-corrects himself eventually. You just can't tell him what to do. You can give him feedback. He may consider it. He may not. He will proceed as he sees fit, which is usually the best approach anyway. In the long term, he makes mistakes along the way. Many mistakes. And then he learns from them. He's not tweeting about politics as much. Sure, he may tweet a link to the Twitter files, but now he's not commenting on that in higher detail.
So he is the person who is going to decide, can I do SpaceX, Tesla, Twitter? Do I have to
can he though,
delegate
Felipe?
more?
Do you think he can?
Exactly. No.
Yeah.
Well, that again is you're not going to tell him, and I'm not going to tell him because he won't listen.
Exactly.
It's up to him. He's going to have to make that decision. And what we need to be comfortable with as investors, let's say Tom Zhu has been rumored as being a number 2 coming in. Great news that he's got the values of Tesla, so that's an internal point is very important. But will he be given a free rein to run Tesla if that's what is decided? And that's the part. It's going to take time for us to get comfortable with that. Again, no, the self-correcting mechanism at Elon Musk is Elon Musk and nobody else.
Well, Philippe, at the same time, though, is Musk too dismissive of how he's perceived? Forget about is he working and doing too many things? He's like, oh, I have 127 million followers on Twitter, so I'm doing just fine. Like all of those people who follow him like him and are potential car buyers. Like, do you think he has a blind spot here on this front?
Probably. I mean, that part of the conference call was not the best part of it, and so yes, no, there's a risk that he goes in a direction, believes in something, and then consumers are somewhat turned off or disappointed. I think that's definitely a risk, and I wish we didn't have to deal with that, but it's been part of the package. It's a package, and then Musk can redefine the package. We can't.
Felipe is a smart man. I like him. He makes some very good points. Now, the host, on the other hand, said that Elon has a blind spot. Elon knows exactly what he's doing. He has reduced his political commentary. He didn't stop it, but he reduced how divisive it is. And I think that is going to be good for Tesla stock, but clearly Elon understands that he is potentially driving some customers away when he makes very strong political comments. He knows about it, but this is not a blind spot. And Felipe was very polite. He didn't say he has a blind spot. He just said this is a risk. That is the right way to put it.
Okay, but I think at the core of this too, even if you're talking about a guy that has 127 million Twitter followers, there's still a Musk that has off-put so many of the potential buyers and even some of the retail investors who had chimed in on Say and submitted that question. They're recognizing what kind of hit that could mean to the brand in the future.
Mm-hmm. Yeah, no, it is a risk to the brand. I think the brand is interesting. The brand is very, we said before, it's a messianic brand in a way. It's about to make the world a better place in many different ways and all this. And it's a very difficult. It's such a vague in a way or unfocused brand. It's very, very difficult to manage. But again, going back to what is Tesla about when it comes to cars? It's to make the transition happen. The faster, the better to some extent. And to do that, you have to have affordable product.
Felipe just completely gets it. Good job.
And the product is still very attractive. And all of a sudden, it becomes much more affordable. And so I think as consumers, yes, you can have reservations about all kinds of things, but you'll be looking as a consumer, is this a product that fits my needs? Is it affordable? And right now, we'll see how the rest of the industry responds to what Tesla has been doing. But right now, it's a very, very good value proposition.
The automotive industry has responded to Tesla's price cuts by doing absolutely nothing because they simply cannot. For example, Kia, it cannot lower prices really. They will have to do something. Lower prices, make their products better, or reduce their production, which will increase their prices further because they are going to lose the scale. They have no future. which is very different from Tesla stock. Here's the buying opportunity of Tesla stock explained by Elon Musk in 20 minutes. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.